Hello there.
Hello and welcome to Battle 3, everybody. I'm the Gentleman Investor. Let's invest. This week, we're going to reveal who won the battle between Tesco and JD Sports. We're going to have a look at our weekly portfolio update, and we're going to discuss this week's battle stocks. Without further delay, let's get underway. Tesco and JD Sports fought it out last week. We've added up all the votes, and the winner is Tesco's! Let's make our investments. So we've had two battles and two stocks have been added to our Battle Royale portfolio. The aptly named Tesla and Tesco's have been added with 2 votes apiece. And courtesy of Simply Wall Street, this is what the portfolio currently looks like. If we had held both stocks for the full 7 previous days, we would have beaten the US market, which grew by 3.6%, whereas this portfolio has grown by 4.3%. Again, according to Simply Wall Street, the portfolio is defined as a past performer with some value. Let's see how that changes from week to week. Here's how our investments are looking. The Battle Royale started with 25 and it's up to 50. Not that much change, but we're in the green by a full 3%, or almost 3%, thanks to Tesla. The benchmark, 25's injected, and it's now up to 50. That's also grown by a whopping 1.38%. I'm not sure if it will keep up with that good trajectory, but let's find out and cross fingers. And finally, the income generator, also up to 50, after 225 deposits. And that's also grown 0.06%, but we'll take it, particularly since this one we're relying on the dividend payments to generate us some income and some winnings for you. Also up, all 3 portfolios in the green. Very happy with our second week.
3, 2, 1, fight!
This week's theme is Best Online Marketplace, and we're going to look at RightMove and MoneySuperMarket. First, we need to define what an online marketplace is. I took a general view and considered companies that fall within the definition of an e-commerce platform that connects buyers with sellers. In addition to MoneySuperMarket and RightMove, we also considered Etsy, Airbnb, Wish, Folksy, and Not on the High Street. And that's not even to mention the elephant in the room, Amazon. I think Amazon is a different beast and is best left to its own separate, detailed future examination, I think. Got to give the little guys a chance. Amazon aside, Etsy, Folksy, Airbnb, Wish, and Not on the High Street weren't chosen for various different reasons. For example, Not on the High Street and Folksy, both of which I confess I'd never heard of before researching it for this video, aren't listed. So that's a nice easy one that we can just completely disregard. I also haven't mentioned Shopify, which along with Etsy and Airbnb are all American listed stocks and to be honest are quite tempting. That's without a full due diligence, to be fair. Regardless, they're edged out by MoneySuperMarket looking like the best value at the moment, and of course RightMove is the hot stock in demand. Of course, I also prefer to invest in UK stocks where there's no withholding tax and you don't have to worry about those pesky FX rates. So then there were 2, and I'm of course happy because they both look affordable and they're English companies. MoneySuperMarket is a great price at the moment with a PE of under 15. And while I try not to get carried away with exciting stocks with PEs over 25, RightMove is only just over as of the 12th of September with a PE sitting at 27. And it can also be an exception due to the interest that has been shown in purchasing it outright. Now, the PE ratio is not the only thing one should look at to determine a company's value, but for the purposes of this video and in order to keep it simple, let's pretend it is. So MoneySuperMarket is the better price and has a higher dividend. So why would we even consider RightMove? Well, that's because it's got the added interest that there's been an offer from the REA group at a 27% premium to what the share price is trading at. That offer has been rejected just this week. So does an offer of a 27% premium make it a good time to buy? Well, not necessarily, of course, because the price itself has just jumped about 25% since the offer was made. And it hasn't gone down yet, even though the offer has been rejected. It does, however, mean 2 things. One, that the property is trading at a good value, or at least a value someone would pay for it. And number 2, that since that offer's been rejected, they may well come back with a better option. So chances are you could make a decent bit of money and make it in the very near term. So to oversimplify matters, should we choose MoneySuperMarket, a stock that looks like great value, or RightMove, a stock which could be sold at an uplift from its current price in the near future if an improved offer comes in, but conversely could also easily fall from 25% to its previously trading value if all the interest disappears. Well, my vote this week is for Money Supermarket. Please let me know what you think. Do you agree that we should be investing in Money Supermarket, or do you think it should have been RightMove? Please let me know in the comments. Thank you so much for watching, everybody. See you next week.
Goodbye.
Vote for your share in the comments.